24,102.90. Yep, that is exactly where the Nifty 50 closed in yesterday's session, decisively smashing right through that crucial 24,100 mark. The bulls are officially back in the driver's seat, guys. We saw the broader market staying impressively firm, totally shaking off the recent sluggishness, and closing with some serious, undeniable upward momentum.
So, welcome back to The Explainer. I am super excited to guide you through today's top-down, strictly data-driven market breakdown for June 23, 2026. We've got a ton of fascinating data to unpack today, from Access Direct, HDFC Sky, 5paisa, and Spider Software. My goal today is pretty simple. We are going to use the hard numbers to cut right through the noise and map out exactly what you can expect when that opening bell rings.
All right, here is our roadmap for today. First up, we're tracking the Gift Nifty. Second, we'll look at institutional money flows. Then, we'll dive straight into the Nifty 50 market outlook. And finally, wrap things up with the Bank Nifty market outlook. Let's just get right into it.
Okay, kicking things off with Section 1, tracking the Gift Nifty.
You know, yesterday's trading session tells a really fascinating story. The Gift Nifty near-month contract surged sharply right at the open, but then it spent the bulk of the day in this very steady, sideways grind, ultimately settling right near the 24,104 level. The fact that we didn't see any sharp selling pressure, that points to a market that is broadly comfortable right where it is. Because of this disciplined little corridor, the data is signaling a cautiously flat to positive open for the Nifty 50 today. Specifically, we're projecting an opening zone right between 24,080 and 24,150.
But, and this is a massive but, that positive technical projection relies heavily on global headlines. The broader macro and geopolitical backdrop is what's really steering the ship right now. Everything, and I mean everything, hinges on whether the US-Iran 60-day roadmap, which was just agreed upon in Switzerland, continues to hold. If that ceasefire framework remains stable, if oil markets stay cool, and we don't get any fresh closure announcements around the Strait of Hormuz, well, our technical predictions should play out beautifully. Any sudden escalation, though, and honestly, that entire calculus shifts before dawn. All right, let's transition down from that big global macro view and jump into Section 2 to check out the institutional cash flows. Let's see exactly where the smart money parked itself yesterday.
There is a wild tug-of-war happening behind the scenes. Just look at the stark contrast between foreign selling and domestic buying in the cash segment on June 22nd. We saw foreign institutional investors acting as net sellers, pulling out roughly 635.9 crore rupees. However, domestic institutional investors completely stepped up to the plate. They were net buyers to the tune of 1,035.7 crore rupees. The absolutely crucial takeaway here, this aggressive buying from DIIs more than offset the foreign outflows, giving the market a super solid bedrock of support for that upward move.
Moving further down the funnel to Section 3, let's analyze the specific, granular details and the options data for the Nifty 50.
Before we look at the derivatives, let's see which specific large-cap stocks were actually driving the cash market yesterday. On the bullish side, pharma and IT completely led the charge. Cipla had a massive day, up nearly 5%, followed by some really solid gains from Tech Mahindra and Dr. Reddy's. Now, on the flip side, we did see a bit of a drag from the FMCG and consumer discretionary spaces. Asian paints shed over 2%, alongside some smaller dips in Titan and Nestle.
Okay, let's check out the options data to build our understanding of trader sentiment. Looking at the current week expiry open interest distribution for the Nifty from Access Direct, notice how the data from our sources indicates a 2.5% jump in the Nifty's price, right? But that was accompanied by a 6% unwinding in open interest. When you see the price going up while open interest is going down, well, it's a textbook indicator of short covering. The bears were essentially forced, actually, scratch that, they had absolutely no choice but to buy back their losing positions, which just dumped more fuel onto the rally.
So, what does this all mean for today's session? I want you to think of today as a battlefield map. We are looking at a classic tug-of-war. On one side, the bulls have built massive support at the 24,000 level. We're talking about the highest put writing sitting right there at 1.2 crore contracts. On the other side, the bears have really dug their heels in at 24,100, which holds the highest call writing at 1.0 crore contracts. For traders, this means Nifty could easily push higher if it convincingly breaks above 24,100, or it could slide fast if that 24,000 floor caves in.
Let's shift gears for Section 4 and move our focus over to the banking sector to see how it compares to the broader Nifty 50. Looking at the Bank Nifty open interest distribution, we're seeing a very similar, yet honestly even more aggressive pattern. Bank Nifty saw a highly impressive 3.4% jump in price, alongside a slight 0.9% decrease in open interest. Just like we saw with the Nifty 50, this combination strongly points to a covering of short positions. The banking sector showed incredible relative strength yesterday, giving us some crystal clear evidence that the bears are retreating.
Translating that into actionable levels for today, let's clearly define the critical boundaries for the Bank Nifty. If you're holding long positions or looking to initiate fresh trades, listen up, because here is your map. The major bullish support lies at 57,700, backed by 10.5 lakh put contracts. The bearish resistance you need to watch is sitting squarely at 58,000, guarded by a hefty 14.9 lakh call contracts. The Bank Nifty is definitely in a positive trend right now, but a daily close below that support zone, that's where fresh short positions might get triggered.
Which brings us to our final big wildcard question for the day. As we've unpacked today, the domestic money flows are strong, the short sellers are scrambling to cover, and the technical support levels are incredibly well defined. But that global stage is still looming. Will the US-Iran ceasefire framework hold steady enough to actually let these bullish technicals play out? Or are international headlines going to rip up the charts? You're definitely going to want to keep your eyes on the news feeds just as closely as your trading screens today. Thanks so much for joining me on this explainer. Stay focused out there, and I'll see you next time.